What's up, everybody? I've seen those same news reports that you have, which say that home prices are down, which may be giving some buyers hope that the market will continue to correct. Well, I'm here to tell you that is false hope. We may not be in that crazy market we were in last year, but right now we actually have a much bigger problem. So today we'll take a look at Margaret Heidendry's article in Realtor.com titled, "As Home Prices Fall, a Whole New Housing Problem Has Just Reared Its Head," and Diana Olick's article in CNBC titled, "House Hunting is Already Tough. Guess what? It's about to get harder." To help me explain why we are facing a much more serious issue that will exacerbate the affordability crisis that we're already dealing with. So let's dive right in. According to Realtor.com, there were 7.1% more homes for sale in June compared to the same time in 2022. This means that there were 41,000 more homes available to buy on a typical day this past month than 1 year ago. However, the inventory growth rate for homes actively for sale continued to slow for the fourth month in a row, registering less than half of May's 21.5% rate. In the final week of June, they noted that the inventory actually declined on a year-over-year basis for the first time in over 59 weeks. Although the decline rounds to zero, this week marks the first time that there were fewer active listings compared to a year ago in more than a year, notes Daniel Hale, chief economist for Realtor.com, in her analysis of data for the week ending June 24th. It is notable in that it highlights a key reason why, despite high costs, home prices have not budged much. The lack of inventory is just keeping home prices from falling. In fact, where I am in the DC area, good homes, meaning those homes that show well and are priced right, are still going in multiple offers and selling way above the asking price. Buyers have pulled back from the pandemic era frenzy as higher interest rates have cut into their purchasing power of their housing dollars. But sellers have pulled back even more, with mortgage rates going even higher, crossing over the 7% again last Thursday for a 30-year fix. According to Mortgage News Daily, homeowners have very little incentive to sell their homes. They call this golden handcuffs, as sellers who would like to move to either downsize or upsize are staying put because they don't want to trade in their 3% or lower interest rate to buy something with a 6 to 7% rate. Heidendry writes that 1 out of 7 homeowners who are staying out of the housing market this year cite mortgage rates as the reason. So a spike in overall inventory is highly unlikely anytime soon. Prices peaked last June after rising over 45% from pre-pandemic levels. Once Fed Chair Jerome Powell started to raise rates, prices started to come down as mortgage rates basically doubled in a matter of months. According to the latest S&P Case-Shiller Home Price Index, prices bottomed in January, even with the higher interest rates. Now, we all know that real estate is very localized. So what is happening in one part of the country may be very different than what's happening where you live. Just keep in mind, these are all national statistics. According to the National Association of Realtors, U.S. pending home sales fell 3% in May from April, which just indicates fewer transactions as a whole. But this isn't necessarily because buyers are standing on the sidelines. This is just because there are fewer possible houses to buy in general. So the number of transactions has to be down. Despite sluggish pending contract signings, the housing market is resilient with approximately 3 offers for each listing, NAR's chief economist Lawrence Yun said in a release. The lack of housing inventory continues to prevent housing demand from being fully realized. But I have to tell you something in real time. I know I said earlier that homes here in the DC area that are priced well and show well are selling in multiple offers for way over the asking price. But this is only for those houses. I am also experiencing homes on the market that are just sitting on the market without any offers and are having price reductions week after week until they hit a price where the buyer sees the value. It's really weird. If a seller seller is too greedy and prices their home where the highest house sold in the last few years, most buyers will not go for it. The house will sit, even if it shows well and is in a highly sought after neighborhood, until the seller reduces the price enough to get a buyer interested. In this situation, if there is only one offer, the buyer will most likely be able to have a normal transaction with possibly a full home inspection, an appraisal contingency, and all that other good stuff. And honestly, the seller will most likely net less than if they had just priced their home right to begin with. Buyers are already paying a lot more now than they would have been a few years ago if they're getting a loan with the high interest rates. And quite frankly, they're just fed up with greedy sellers, even with so little inventory. According to Redfin's latest housing market update, new listings fell 27% from a year earlier during the 4 weeks ending June 25th, the biggest drop since the start of the pandemic. That has contributed to the total number of homes for sale declining 11%, the first double-digit drop in over a year. Active listings, the number of homes for sale at any point during this period, dropped 11% from a year earlier, the biggest drop since April of 2022. Active listings were essentially flat from a month earlier. Typically, they post month-over-month increases this time of year. Pending home sales were down 14.5% year over year, continuing a 13-month streak of double-digit declines. And on average, 5.5% of the homes for sale each week had a price reduction, up from 5.2% from a year earlier. And 36.7% of homes sold above their final list price. That's the highest share in 10 months, but is down from 52% from a year earlier. Homes that sold were on the market for a median of 27 days, the shortest span in 10 months. That's up from a near record of 19 days from a year earlier. And the months of supply, which is a measure of the balance between supply and demand, was 2.6 months, near the lowest level in a year. Just to give you context, they say that 4 to 5 months of inventory creates a balanced market. So 2.6 months, it screams a seller's market. So what's the bottom line? As long as inventory remains tight, home prices will remain competitive, at least for those homes that show well and are priced right, even with these higher interest rates. Based on the current housing market data, Danielle Hale, the chief economist for Realtor.com, expects 2023's overall inventory to decline for the year as a whole. An ongoing lack of existing home sellers as buyers adapt to a higher mortgage rate environment has hampered the inventory recovery, says Hale. Could new construction be the answer to our inventory problem? I don't know about where you guys live, but around here, new construction is really expensive. So even if it does create more inventory, I just don't see it as a way forward to help with the affordability crisis. If you missed last week's video on the future of new construction and Allie Wolf's opinion on what she thinks is going to happen moving forward, definitely check it out next. I hope you guys got some value out of today's video. It's a lot of work making these every week, but I really want to give you the best information so you can make the best decisions for you and your family moving forward. Thanks for watching. I do appreciate it. Bye.